All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And the first thing I want to talk about is, well, probably the cause of the recent pump in the price of Bitcoin and other cryptos. We went up $10 billion, which honestly is not that much. And kind of people are freaking out about it and saying, oh, we're on the upswing of the bull market. And we may be. That would be a good thing. But this looked like a pump to me. And it was probably a well-coordinated pump with really good news to boot. So the first thing that sort of pumped the price, at least in my opinion, was the fact that the SEC commissioner of the U.S. says Bitcoin ETF will be approved eventually. So the commissioner at the U.S. Securities and Exchange Commission believes a Bitcoin exchange traded fund, or an ETF, will ultimately be approved. So a number of Bitcoin ETF proposals have filed for SEC approval, but none yet have got the green light. And Jay Clayton, chairman of the SEC, said he doesn't see a pathway to a cryptocurrency ETF approval until concerns over market manipulation are addressed. And the SEC has to date rejected at least 10 proposals. And discussing the Winklevoss's proposal with roll call, Jackson said it was not a difficult case, but the risk of manipulation and harm to investors was enormous, while the market has a very serious liquidity problem. He continued, I'm happy to say that the market participants have begun to come in with ideas. Whether or not we're going to find one that really protects investors, I don't know, but I don't know what that Winklevoss case was especially close. So another SEC commissioner has been even more pragmatic over the possibility of a Bitcoin ETF. Back in July, Hester Pierce said that the Winklevoss's proposed rule change satisfies the statutory standard, and that we should permit BZX to list and trade this Bitcoin exchanged product. But from my perspective, we need to be mindful of what our role is, and it's not to be the ones who decide which innovations and which technologies get through and which ones don't. Well, it kind of does. You kind of are. So, so they were saying it seems like some of them are like, yeah, no, it's going to ultimately be approved, and other ones are like, no, nothing's going to get approved until the market manipulation goes away. And that's going to be kind of hard to do when all exchanges in the world have this pairing of Bitcoin to Litecoin, Bitcoin to Ethereum, and so on and so on. And a lot of altcoins are only paired with Bitcoin. So if you go onto an exchange, maybe you're trading a new coin and just came out a couple months ago, it hit an exchange. Well, it's likely that it doesn't hit an exchange with US dollar to that coin's pairing. Likely it's Bitcoin to your altcoin. And so without the price of Bitcoin, there is no price to your coin, essentially. They're all riding on Bitcoin. And that's very unusual in the trading world. In the stock world, it's not, Microsoft to Apple stock that you trade. It's not Microsoft to some weird company that you're trading that's relying on Microsoft's price to identify the price of that stock. That would be crazy. So that would mean if Microsoft went way down because of some blunder, Apple would go down. That makes no sense. And it doesn't really make sense in the crypto world either. And so manipulation is pretty rife because you could buy over the counter and then sell, or sell and then buy over the counter. And a number of manipulation ways, and all the margin trading that's basically freely available to everybody. And the fact that if Bitcoin goes up in price, your coin goes up in price, and if it goes down, your coin goes down as well, because now the Satoshi is worth less. So it's a really weird industry. And that was basically one of the reasons I would say that the Bitcoin pumped the other day. The other reason is because the Litecoin Foundation and Beam are making a cooperation announcement. The Litecoin Foundation has approached Beam about possible cooperation to implement Mimblewimble via extension blocks on Litecoin. So if you noticed the other day, Litecoin went up by 30%, whereas Bitcoin was only 10%, and other coins were such and such. So Litecoin was essentially the winner yesterday, up by some 30%. Went from, maybe just under $30 to like something like $40 now, just because of this announcement. So it was basically two announcements on top of each other that sort of pumped prices, somewhat disproportionately, but up either way. And it's possibly a good time for anybody that does manipulate the market to manipulate the market during that time. So one of Beam's goals is to advance privacy in crypto and promote the Mimblewimble protocol. And we're glad to provide Litecoin Foundation with our help and expertise. We have started exploration towards adding privacy and fungibility to Litecoin by allowing on-chain conversion of regular Litecoin into a Mimblewimble variant of Litecoin and vice versa. Upon such conversion, it will be possible to transact with Mimblewimble Litecoin in complete confidentiality. So Charlie Lee the other day was talking about how they wanted to add some kind of privacy to Litecoin, and that makes a lot of sense, because I think the more that fees go down in the whole crypto world, and that we sort of get our stuff together, in the sense that, now there's not $55 average Bitcoin fees, and we have basically almost the same amount of transactions we had in the high of January 2018, and now it's just past January 2019 in February, and we have about the same highs in terms of transactions, yet nowhere near the same amount of fees. And I think as fees go down, Litecoin becomes a little less important than it used to be. It used to be that I would always get Litecoin. I would always automatically exchange coins that are like altcoins that I was mining into Litecoin. Because it was way better than doing it with Bitcoin, because the fees were so high. And now that the fees are low, just like Litecoin, it does take away its validity just a little bit. And I think with the whole privacy explosion of Beam, Grin, Veil, and all these privacy coins and privacy features that are exploding in 2019 and at the end of 2018 to some degree, I think a lot of original developers of coins are starting to realize, okay, well, we need to compete, we need to stay competitive in the market and make some kind of privacy. Otherwise, if there's no privacy on your coin and somebody's looking for that, obviously they're not going to choose your coin. So that's kind of interesting. I'm pretty excited for that with Litecoin, as it is one of my favorite coins. I don't mean to FUD on it and say that it's not as viable as it once was. Of course it still is, but again, with lots of coins coming out with faster transactions and even lower fees, it does take away the validity of Litecoin just a little bit. So the next article is, this is the next dotcom bubble. 95% of cryptocurrencies are useless, says a Bitwise market analyst. And I can't help to agree to some degree with that. So 95% of cryptos are useless, appearing on Masters in Business podcast hosted by Barry Ritholtz, the Bitwise head of global research, offering up striking parallels between the present-day crypto industry and the dot-com bubble in the early 90s, or in the late 90s and early 2000s. So I don't mind new coins coming out, because it is sort of a trial and error sort of thing. It is a sense of, if you don't keep trying and making new technologies and making new coins, you're never going to figure out which coin is going to be the best coin. Of course, so I don't want to stymie that progress, but at the same time, I think a lot of people would agree that 95%, maybe less, maybe something like 90% of crypto are essentially useless, or their blockchain is dead, or nobody ever used them, or they got pumped and dumped once and just never touched again because of that, or because of some other problem, or the developers just stopped working, or a multitude of issues. So I think the parallels are accurate. I think it is the next dot-com. But remember, the dot-com bubble created pets.com and also created Amazon. So commenting in the future, there are 2,000 cryptos out there. 95% of them are useless. It will die a painful death. The sooner that happens, the better. And I kind of agree. And that money can go back to Bitcoin and at least start over and pump the price of Bitcoin and the rest of the cryptos that remain from there. And then, the money can go out from there to better coins that are popping up. So, however, Hogan doesn't expect this purge to sound the death knell in the burgeoning industry. Instead, the Bitwise executive expects the thinning of the herd to initiate the emergence of useful cryptos. And there are numerous commentators in the industry today who agree with that idea, that many cryptos are indeed worthless. I'm one of them. This belief that has led to the popularization of the term S-coin. I don't feel like getting demonetized just yet, referring to the cryptos with little or no economic merit. So I agree. I think a lot of coins should essentially die. All that money should just be sold and just taken back, and then just put into Bitcoin, Ethereum, Litecoin, all the big coins that have known use cases so far. And then from there, you can choose to use your Bitcoin to buy into a new coin that you feel that it is a lot better. But there's a lot of coins out there with $1 million market caps, hundreds of thousands of dollar market caps, and they've never moved and never done anything. The developers don't do anything, and you can find numerous cases of that. So moving on to this article, which I hate, Binance Chain will charge close to $100,000 to list new coins. So the new company's new decentralized exchange, Binance Chain, will charge close to $100,000 for listing new coins. Well, that doesn't sound too decentralized. And why do I have 5,000 blocked ads? I have no idea. In a 45-minute live Ask Me Anything, CZ said that there will be a listing fee for new coins on the company's DEX Binance chain. In fact, Zhao explained that he has deliberately made the fee higher in order to reduce the number of scam projects. I'm sure you made it lower because of that. He estimates the fee will be close to $100,000, and he said that the number will be adjustable over time. And previously, Zhao has also stated that Binance doesn't list poor quality projects or S-coins. It remains to be seen what kind of quality control is set in place. It doesn't sound very DEXy to me. And boy, those ads are just coming in. We're at 5,073. I can't even concentrate. Holy crap! What kind of bug is that? Not so decentralized at first, and that's exactly what I thought as well. Like if you're charging 100,000 people and like there's an owner of it, it's not particularly decentralized. Zhao said that initially the number of network consensus validators will be small and will set to 11 validator nodes. He also said that the exchange goes live. They'll be looking for guys who can run very fast validators, and the nodes will be selected through their close partners, which is, again, not particularly decentralized. However, the CEO has also noted that Binance will have a lot of influence over the network, at least in the beginning, and thus the chain will be more centralized compared to other networks. I'm sure it's going to be, again, not particularly centralized. Why do you even need a decentralized exchange if you have like a very specific owner and it came from Binance and you're charging people $100,000 to list the coins? It just doesn't sound decentralized at all to me. It sounds like complete opposite. But okay, fair enough. Oh, just 11 on this page, but 5,145 on the other page. I don't think I've ever seen that before. That's really crazy. Anyway, so Bitcoin, so a proposal to increase Bitcoin's 21 million supply sparks debate. So at a Satoshi Roundtable event last week, decried by some of Bitcoin's various own version of Bilderberg, the prospect of raising Bitcoin's 21 million cap was raised. It was Matt Longo who floated the proposal in response to a discussion about anticipated adoption of the Lightning Network. With the block reward halving every 4 years and on-chain transaction volume likely to be low in future should Lightning Network take off, there will be little incentive for miners to secure the network, and this could lead to being vulnerable to 51% attacks that would undo the trust instilled in the Bitcoin network over many years, which kind of makes sense because if all these transactions are being off the network, then the miners aren't getting the fees back because when you pay those $55 fees like back a year ago, those fees just sort of went back into the pool, that Bitcoin as fees, and then the next block reward, instead of it being just 12.5, it might have been 12.7, 12.8 or something like that. It might have been a higher block reward than previously given out to everybody. So it just sort of goes back into the system. But as Lightning Network, it is kind of interesting, although I don't agree with a 21 million increase of Bitcoin, or rather an increase in the supply. So an argument has also been made by increasing the 21 million supply of Bitcoin Cash in the future on similar grounds. Due to the network's low fees, miners would theoretically have little economic incentives to secure the network once the block reward diminishes. And it was this guy who said it, and he said, "Fight me" on Twitter, so I'm sure people took him up on that opportunity. Longo's suggestion of raising Bitcoin's total supply is intended to incentivize mining in a future of minimal block rewards and minimal on-chain volume. And while there may be an economic and security case for doing so, it's a matter that resonates strongly, even emotionally, with a sizable portion of the Bitcoin community. And there are also those who are motivated by purely financial reasons. And the fact that there will never be more than 21 million Bitcoins is what gives the currency its digital scarcity. Raising the fixed cap, even by a fraction, could dilute the volume of everyone's holdings, and it's feared and consign Bitcoin to the status of an EOS-style inflationary crypto. So it is a good point that the guy brings up that, you know, if Lightning Network really takes off and it's just abundant and ubiquitous everywhere, it's omnipresent everywhere, then there's really not going to be any on-chain incentives for miners, you know, and then once we actually have, again, to 6.25, now you're only getting that 6.25, and there's very little fees on-chain to actually give back to the miners. So in this case, we have 12.5, and then it's going to be 6.25 or whatever. Before that, I think I might have said that wrong before, but it'll be 6.25. Right now, yes, it's 12.5, but the price of Bitcoin, if it goes up, that helps miners out a lot, and also the actual use case of Bitcoin helps out miners quite a bit as well. So it's very interesting how that would turn out, and it is quite it is quite the debate, and the article goes on a little bit longer, but honestly, so. And it is a Bitcoin.com article, so of course they want to put this in here as FUD or as some kind of drama, which there really isn't any problem right now because Bitcoin mining won't finish till 2140 anyway, and as things happen, the price of Bitcoin goes up and then miners will make more. But again, as Lightning Network takes off, miners are actually going to make less, so interesting conundrum there. Moving on to CoinMarketCap, we have 121 billion market, and you can see that pump here the other day, in case you just happen to not been on planet Earth. We got to go to the old 7-day chart on Bitcoin here. You can see the pump started about 3,400, you can call it, and then there was a little wicked pump there, about 30 bucks or so, and then a huge margin. So if you really want to look at the big pump, it was just about 3,500 to nearly 3,700 instantaneously. So that's basically one person buying millions of dollars of Bitcoin, essentially. And then Litecoin actually pumped even crazier than that. We could see that because of the Litecoin news, because Bitcoin was pumping, first of all, which will pump this price, and then the Litecoin news pumped it quite disproportionately from like $33 to upwards of $45. So well over like 30% or something like that during that time. So again, as I usually like to say during these pumps, this will depump most likely. If we run into a full bull market rather, of course it's going to keep going up. And then what I'm about to say is going to be essentially useless. But every time you see one of these straight walls, this straight wall will be sold later. Whether it's a day from now, whether it's by the time you watch this video, 2 days, 3 days from now, it usually always occurs. So just be careful watching the markets during this time. And selling at the top here, you can usually pick it back up at 3,400 because this is definitely not organic growth. I mean, this is clearly like one person buying millions, or a group of people buying millions of Bitcoin, something like that, which is just not organic growth, period. And they intend to sell pretty soon once they start set up their margin trades when they realize it's going to go back down, so that they can make a whole lot more and do it again a few days later. But I hope you guys enjoyed this. Make sure you subscribe to the channel, like the video. That helps me out a lot. My social media is in the description below. My Twitter, my Twitch, my Steam. Oh man, 3. It's so hard to remember. But make sure you guys follow me on those if you get the chance. That's all I have for you guys today. Hope you guys enjoyed it. And as usual, I will see you next time.